What's up, traders? I hope you're all doing well and I hope you're enjoying your weekend. So, let's start this week off with our commodities analysis, and we're going to start with natural gas, gold, and I'm going to go through crude oil as well. So before I start my video, I just want to show you how we take trades using our weekly forex zones. So if you want to skip this part of the video, I'll put the timestamp up there. And if you want to watch this part of the video, that will be beneficial for you, as I'm going to show you how we take entries using these zones and how these zones plays a really important part in your trading. And if you know these zones, the chances of making mistake will decrease dramatically. So let me show you this week's forex report. Right here we have the forex report. I've sent it to my priority members, and one of the pair I have sent is right here, Euro New Zealand. And right here I've sent these zones, and as you can see, the market was pushing up, came back down, and we have a nice engulfing pattern, and this was our entry pattern. And as you can see, the market ended up giving us 97 pips profit. So this was one of the pair I've sent to my priority members, and let me show you. So right here, as you can see, I have these zones marked on my chart, and we had a nice double top move, and that was a valid entry. And here you can see we got a nice 180 pip take profit. So this is the power of taking an entry using these zones, taking a counter trade, and you know where to enter the counter trades once the market hit these zones. There will be no guessing games, so that you know where to enter. So once the market is in an uptrend, you know where to enter the counter trades from. Right here is an example. Right here, as you can see, the market pushed up from our zone here and ended up giving us some nice 500 pips from the buy, and then we had a counter trade right here, 180 pips right here, and this was one of the pair as well. Let me show you one more pair right here. This is a trade I am in right now, and as you can see, the market, we are still in the profit, and this is 94 pips position right here. And this was a trade I have sent it to my priority members as well. This is Australian dollar New Zealand. As you can see, we had this nice double bottom action, and market is pushing up, and this is 58 pips position. This is the trade I'm in as well. So right here, this was an entry I have sent it to my priority members with an entry pattern. As you can see, we had this nice move here, this engulfing move here. Market is pushing up. I've asked them to wait to enter this trade, as we have a good major zone below that. This was a minor zone, but I can see the market is respecting this zone as market is pushing up. This is another 172 pips move. So this is the importance of taking your trade using these zones, and these zones plays a really important part in your trading, as you have just seen how these zones react once you have marked these zones in an accurate way. So if you want to learn these zones, you can join one of my partner broker with minimum of $500 deposit. I will start sending you this report every single week, every Monday. So once you see these zones yourself, how I mark these zones, then you can able to do it yourself, and you can able to take this trade on your own without relying on any signals. So this is what I wanted to share with you guys. If you are interested, then there's an option right here. The links are in the description. If not, then it's totally cool, guys. Make sure you hit a like and subscribe button for me, so that you will receive analysis like this every single day. So with that being said, let's start our analysis with natural gas. Right here now, what to expect for next week on Monday. Right here, as you can see, the market was pushing up and now hit the minor level of resistance. Right here, if you see, this is a minor level. If you want to mark these on your charts, this is 7.849. That goes up to 8.045. So this is our minor resistance. Let me show you. This is a 4-hour resistance. So I don't normally take engulfing entries on these resistance, but it can still work. As you can see right here, if you mark your zones on a higher time frame, always take entries on a lower time frame. So this is one of the example. This zone was marked on 4-hour time frame. As you can see, the market pushed down from here, pushed down from here. So we had like two touches here, and if you go down on 1-hour time frame, this zone has acted as a good level of resistance. Market pushed down from here, and if you can see here, the ATR of this candle, this engulfing candle, once the market hit this zone, right after that we got this engulfing candle, and the ATR of this candle is 12. So if you would have entered on this candle, the way I take my trades is right here, and as you can see, the target would have been hit easily. So now what to expect from natural gas further, as now the take profit has been hit and the market is now above 50 and 20 EMA. If you see closely, 20 EMA is now crossing over 50 EMA. Fast moving average is now taking over slow moving average means the market can become bullish. And if you remember, I have said that once our take profit hit, which has been hit, I will look for few candles pullback. This is my target. I expect market to hit right here, 7.938. So we got this condition here on currency.com data. According to that, I'm expecting market to hit this green zone, this full take profit. So once my take profit is hit, I normally look for another green candle, then I look for another at least two red candles, and then I look for a bullish engulfing candle. Once I get that, then I look for another long trade. And now we had a pullback right here. So now what to expect? Now on Monday, we can either get a candle that can push down, 4 hour candle that can push down and then close above right here. So we can get, so we have 1 2 3 move already, market broken above the previous high, and now this price action can use this high as a support. As you can see, market is not breaking and closing below that. So this become the recent level of support in an uptrend. Now on Monday, if we get a candle that goes down and close up, that will be a bullish sign. So we will look for a bullish entry once we have a good reason to enter here, and we will take long until we are in the zone. And once we get a bullish candle, just check the ATR of that candle and you can take your long entries from there. And once I reach this gray zone, this minor zone, if we still have a bullish move, I will look for another bullish entry above. So this is a zone I will look for taking my profit and look for a next candle. If we have a break and close above, then there's a chances the market will move up. And if we have a push down like this candle, then I will update you guys accordingly. So right now, not taking any short trades as we already have our hit take profit hit on a 1 hour time frame, and now I will look for a bullish candle for market can push up from here. Again, we will see on Monday how the market opens. If the market opens below 50 EMA and 20 EMA, then we can possibly see a push down to this green zone. Again, guys, I want to see two candle closes below 50 EMA for the extra confirmation that market can push down to this green zone, from where I will look for buying opportunities. Right here on currency.com, as you can see, we had our take profit hit with this engulfing candle. And if you remember, I was saying that I look for two candles pullback. Now we got a pullback, and right here we see we have this engulfing candle from the minor level of resistance, which is 7.992, that goes up to 8.8, 8.186. And if you look on 1 hour time frame, that was our entry right here, and the target would have been hit using 1 ATR on this candle, and this is a minor level of resistance. Now we had a pullback. We had this 1 2 3 move, broke above this previous high, and market is likely to use this previous high as a support. Right here you can see not breaking and closing below this high. So now we look for another bullish candle to take long trades straight to this gray zone using my ATR as a target. Once we hit this gray zone, if we have a push up and have a bullish signal, then I will take another long entry. But if we do not have any bullish signal, and if the market push up, give us a nice engulfing candle in this zone, then I will go short. Otherwise, I will take short trades once we break and close below 50 and 20 EMA. And as you can see, 20 EMA is now crossing 50 EMA. Fast moving average is crossing slow moving average. That is also a sign of bullish confirmation. So wait for the market to give you a bullish candle to take long, or break and close below, which is less likely at this point, to take short. And if we have a break and close below with two candles closed, then I will look for long trades again from this zone. These are the conditions for you guys. If you're confused, please rewatch this video, and if you're still confused, you can always send me a message on Instagram. I will get back to you ASAP. Right here on gold, what do we have? On gold, if you remember my previous video, I have said that market is now below our support and we can expect a retest. So now once we have the second candle close, I will look for a retest and bearish candle to take my short trades 1 ATR target. As you can see, we got this retest with an engulfing candle, and looking at the ATR of this candle is 11, and if you would have entered here, target would have been hit easily, giving us nice $11 move. So that was your entry as well. If you have taken this entry, congratulations guys. This is how I take trades, and if you have been following me from last couple of months, you know how I take entries. So right now, what to expect next? We have a very minor level of support here, which is 1786, that goes down to 1783. So I still expect a market to push down, and once we have a hit of 1786, and if we have a bullish reason to enter, then I will take my long trades. Otherwise, we have a major support below that 1775, from where I'm looking for an aggressive way to enter from this zone. And this is gray zone, as you can see, has acted as a good level in the past. Right here, market pushed up from here, pushed up from here. So this is a zone I'm paying attention to, taking my entries on 1 hour time frame from this gray zone, and from this green zone I will look for entering once we have a hit of it. Right here on crude oil, what do we have? So if you remember, I have said that I'm expecting market to hit this zone, which has been hit. But one thing I just want to warn you guys, as you can see, we took this entry previously, market hit our take profit. We took this entry here as well. We took this head and shoulder entry. If you remember, that was our take profit hit as well. We took this entry as well, and then we took this entry as well. Now, as you can see, this zone has acted as 1, 2, 3, 4 times now. Now I will avoid taking a short entry from here. So with experience, I'm telling guys, I can be wrong, but with experience, when I see the price action has fallen from the same zone 2 or 3 times, then there is a chance that market can break above that zone. So now I will not take any short trades. Even if I have an entry condition, I will look for market to break and close above to take long trades. So I will wait how the price action reacts from this zone. As you can see, we have this bullish engulfing candle as well, and now I will look for buying opportunities once a market break and close above this zone, which is 107, goes up to 111. So for crude oil, I will be extra cautious to take short trades. I will look for a good entry reason, as this market is now in a ranging mode since a while now. Oh, that's all for now, guys. That was a quite long video, but if you are getting value out of it, please make sure you hit the subscribe and like button for me. It helps me in the YouTube algorithm. I hope you trade green next week as well. I'll see you guys in the next video. Till then, take care.